building in Sandy. Yeah, I was like, all right, cool. I was like, yeah.
Let's do it.
So I'm gonna try and, then do some, I'm gonna play with some comps. And then try and, see if they wanna go to lunch on Sunday, since I don't have my kids. Be like, you and your wife wanna go to lunch on Sunday? And, what's up, man? How's life?
Good, how's yours?
What's up?
How are you? Getting some
Hungry.
meats.
Hungry for some little oranges? What you got back there?
Oranges and donuts.
Yeah.
So, I'll grab some. Oh, so far so good. So they're driving down here and northbound I-15 is like from Lehigh all the way down to Orem is like.
Yeah, what is it? I never saw it.
Yeah. I know, and I've got to go right up to Salt Lake County, so I'm hoping it's not too bad.
Yeah.
Yeah, you might not be going up north.
I know, that's what I'm wondering. I'm gonna have to look at it. I missed what you said, what's going on? I know, I was driving down here on I-15 from like, I don't know, Lehigh all the way down to Orem. Heading south or heading south is, or heading north is, like back to back, it's just loaded. That's.
Jeez.
I know we've met, right?
Yeah, what's your name? Lucas.
Lucas.
Yeah.
Okay. And I'm Dave. Dave, nice to meet you, I'm Brian Silverback. How are you?
We met,
What's up? Are you ready?
one house and everything.
Ready as I'll ever be. I just, we'll have to probably throw my laptop on,
Okay.
Okay.
unless it's easier for me to send.
No, we'll just, oh, maybe. Yeah. Yeah, share that with
Oh,
me.
really?
Yeah.
I texted her because when we were talking, we were talking about
There's gonna be-
golf balls. She had time to go hit some golf
Oops.
balls.
Yeah.
She's like, oh,
It's
that
turning
kid
into
is China. So
Oh, wow.
that's quite the trip.
Yeah. I think it was, so her assistant was telling me that. I think it's because her daughter.
Handwriting matters.
or something.
Sure.
And, he took her to China, she showed her around.
Yeah.
University, something out there.
That's a place I'd love to go to.
Yeah.
Like right now,
With
things
everything-
going on.
Yeah.
But I feel like, maybe.
Yeah, right, yeah, the same thing.
I've been one.
But yeah, Heather's awesome.
Yeah, I don't know, yeah, she's super nice. What up, brother? Yeah, man.
Yeah, so basically she reached out to me and, because she's trying to expand this to Spanish speaking. And she speaks Spanish, but, she wanted to, she uses in Venezuela, so she speaks Spanish, but, she wanted to, she reached out to me and she said that she wanted to work with someone that's a native speaker, to help her because, she said like, she speaks good, I think she speaks really good when I was speaking to her in Spanish. But she said that like throughout the day when she's super tired, like
Yeah.
her Spanish is like not the greatest, that's the thing, like,
Yeah.
you know, so she's like, I need someone that's a native speaker. She's like, I heard that you're hard and working and good and to build a business, so I think it's a pretty good opportunity for both of us.
Where are you from?
My parents from Uruguay.
You're.
Yeah, I was the only one that was born here, but everybody else in my family.
Okay.
Including my older brother, everybody was born here.
Yeah.
Yeah.
Okay. So at home, they all speak
Yep.
Spanish.
Yeah, and then, yeah, then I was in soccer, and so 14, I started playing basketball in the US.
Oh, really?
14 to 17, I was playing in Mexico,
Oh, wow.
and then at 18, I went to Spain as well.
Okay.
So half my life, I was half my life, I was in Spanish, yeah.
That work?
Yeah,
So-
I forgot my clicker though. Come on, I know. It's upstairs. I just don't want to run that far. So you'll have to push a button.
All right. I forgot my clicker too.
Dang it. I thought Jake was your clicker. You say-
Well, then I didn't forget. There can be my clicker.
Oh, yeah, I did.
I know, for me. Oh, I'm gonna go run upstairs. Well, walk upstairs. Run, Eric.
super easy.
Yeah, yeah. I don't know how I can do it.
I mean, come on.
My favorite thing to do when people say, how is that spelled? You say it like it sounds like. Of course. Of course. Everything will be like it sounds.
Like it sounds.
So Courtney,
Hey, how's everybody doing?
so good.
Been a chill week, huh?
So good.
Oh, nice to meet you.
Yeah.
I know, hopefully I got a good one. Oh, they all are good. Good morning. All right. What's me? Brian. Brian, nice to meet you. How you been? Good, you? All right, where is everyone else? I think I've seen some stuff that be dropped off in my office.
Yeah.
Just.
Oh, yeah, spring break for everyone.
Yeah. In the
Been busy?
Provo and Alpine service.
Yeah,
Yeah. Yeah, probably. Yeah.
And it.
Easier than it has been.
it was so nice.
Last year or so.
I haven't even brought a coat the last 2
I
days.
think it's supposed to snow on Sunday.
Dang it.
Like, don't get too excited with everybody. Just, you know, but that's bad.
Yesterday was beautiful.
Yesterday was amazing.
I need to like clean,
Cool.
but that's every day for you. I keep thinking I need to clean up my yard. Yeah, I have 2 dogs and we have a dog door and they like steal things and take them outside and rip them up. So it's just like crap everywhere in my backyard and I think I need to clean this.
That was my afternoon / evening.
I keep finding other projects to do.
It's hard coming out of winter. Your yard just looks so terrible right now, you know, and like,
True.
we want to be out in it, but everything is dirty and dusty because it's sitting around all.
So
day.
everyone that lives around me, like at least 3 houses in every direction, front, back, side, everything. No one has kids that live with them.
Oh, really?
Some are retired, some are like close to that retirement age. No one's really old. That's like recently retired or that,
They're a big deal. But loves your kids.
well, it's like past 3 doors. That's where all the young people live. And so everyone around me has really nice yards. And then there's mine that's just like, I'm sorry, there's 5 bikes in the yard. Only 2 of them are ours. I don't know whose the others are. Basketball, soccer, golf clubs, and I'm like, that's just how it is.
Did anybody give you any pressure?
My wife, yeah, yeah, that's the only one that gives me pressure.
In our neighborhood, we have a few people who are like really trying to not water their lawn to preserve, you know, water. And so they just let their yard go to weeds. And some of the neighbors, we have some older people in our neighborhood too. Some of the neighbors are supportive of their efforts and some of the neighbors are like, your dandelions are getting in my yard. So
Yeah.
they've had like
Figure it out.
collaborative weeding. It's been really kind of sweet. Like this neighbor came over and said, what are you gonna do about your dandelions? And the lady's like, you can help me weed them. So they went out and.
They said, okay.
weeded.
That's what I keep telling all of my neighbors. I'm like, yeah, we're in a drought on saving water. That's why my lawn's brown, not that I can't figure out my sprinklers. But now I feel like we're not gonna be in a drought. Like,
It's been better.
there's
the
a
last
bunch
few
of
months.
water in Utah Lake. Every day I drive past the Jordan River, I have to mention it to my wife. I'm like, look at how much water is in there. And she's like, shut up. Like, there's gonna be floods. All right, let's get going. We got the important people here. Okay, this week, what happened good? What did you learn? What did you do?
Call people.
Yes, and you are taking a listing in September
Yeah.
from making calls. That's good.
I'm hoping to have a trailer listing next month, cause, I have another person moving to Texas that lives in a trailer in Sandy.
Sweet.
Dave's also had a couple people talk to me,
Oh,
Yeah,
I'm trying to get some movement.
trying.
Don't sound excited about it, Dave.
Well, the second guy, he stopped responding. Keegan didn't respond to me on Tuesday either, so.
Hey, he started the conversation.
I don't know, like, I don't know. He's got a girlfriend and I think she might, I can't read her. She's like really young and I don't connect.
Don't connect with young people.
I do with some, just not this particular one.
I went to the dentist today, didn't have any cavities. So it's a good thing. I will continue to drink my Mountain Dew every day. What else? Anything else good?
I got 2 potential new listings coming up, maybe.
Yes.
Knocking doors.
Okay.
Got older lady yesterday who's looking to move out, and she's been packing, but she hasn't signed an agreement with anyone. And so I'm gonna try to get in there.
Nice.
And then, also, Todd, one of the agents, he has a client that's interested in buying in Bluffdale, but it's just a big neighborhood. So I've been knocking in that neighborhood, and there's a house that apparently he tried to sell it, but then ended up not being able to sell it, so now he's renting it out. So now I'm talking to him to see if he is still looking to sell it, so we have someone that's interested in buying in that neighborhood. Hopefully I can convert him into my business. For us too.
Nice.
How's your
Oh,
one listing going?
yeah, and we get offered this today for that house.
You got an offer?
Yes.
We're getting an offer today, the
How much you thinking of it?
full price, that's what they said.
Really?
Yeah.
Nice.
For the firehouse?
Yeah. Oh, that's a whole different. story. Yeah, Jake had to play survival mode. A house in open house.
On the full circle, love it.
All right, lost my mouse. All right. Anyone get anything new? We got some offers coming for Lucas. Anyone else? I know a couple of people that aren't here have offers out. Tanner, if you know him, he's got, he listed his own property, he's getting offers on it. Who else? Like Becca's writing up offers. We got a lot moving right now, so it's good. Welcome to the team. We got a bunch of new people. Looks like, Paola, you're the only, new one here. Ivan, do we celebrate you because you're finally licensed? Does that count? You've been here for like a month, but you're now licensed, so welcome, everyone. Say hi, be friends to these people if you see them. We were talking yesterday in lunch, a lot of these new people even speak Spanish. Got Erica, Ivan. Are you just Spanish or are you Portuguese as well? Why did I think you spoke?
I speak Spanish, but I understand.
Oh, you understand it? Yeah, okay, because it's like Spanish with marbles in your mouth.
I think it's like the fancy Spanish. They speak more like proper. I guess.
The fancy.
I'm trying to find.
Okay, is this tomorrow? Tomorrow we have, understanding the 1031 exchange and real estate investing. If you were going to invest in real estate, if you want to work with investors and you don't understand what a 1031 is, or have very basic knowledge, this will be great. Plus you'll get some CE with Eden, and it will be here in the large training room. On the 9th, you will not want to miss this one. Branding Brilliance. That's a creative title. Good job. Peyton Slater, she runs the marketing for the Red Sign team. And so she does all the branding, all the social media, generates leads online. Oh, she told me yesterday how many leads she generated in March. Oh, it was over 300. And so she threw the whole Red Sign Easter egg hunt. Like, she is a marketing genius. That's what she does. She is going to talk about crafting your unique real estate identity. So that's April 9th, 9:30 in the large training room. That's a not miss kind of an idea. She is like, get to the point, get things done, get results kind of person. So go learn from her. It will be awesome. And I hired her, so really it's me that's this awesome.
You're the brilliant one.
I'm the brilliant one. Yeah. Nope. Is the 9th Tuesday?
Yeah.
Yeah, so this will be before team meeting. Come to it. I'm not sure how long it is, probably an hour, maybe all the way to team meeting, but this should be good. In real estate, there's two sides of it. There's prospecting and there's marketing, and you should be doing both. This will be a lot of the marketing side and how to craft your message and your brand to show that to people. So then when they're calling you, or when you're calling them, they're like, oh, you're in real estate. Yeah, I already know because of everything that you did. And then it's an easy conversation to say, bring me business. And then for team meeting, we have Real Talk and Real Estate Models with Heather Groom and Shoni. If you don't know Heather, I think that she will make $1 million GCI this year. And that is just her. She has this unique way of just attracting people to her and just getting crazy amounts of business and somehow servicing it. And it's luxury, it's land, it's in St. George, it's all over the place. Like she is someone that you want to hear from and see how she's built up her business, because she hasn't been doing it full time for very long. She used her previous life, previous connections, and rolled that into now. So it'll be fun to hear from her. She's amazing. Ignite. So April 9th. Oh, so this is Ignite After Dark, by the way. If you can't come or you want to do some additional Ignite, scan this QR code or we can send this out to you. It looks like on Tuesday, from 7:30 to 9:30, we're doing Define Your Value. They do one a week, every Tuesday the same time. So it's a great one to get. And then do we have ours? Nope, but next week we have Win the Buyer, Win the Seller, and something about offers, I think. So it's like Josh, Angie, and someone else awesome. So get ready for next week, it should be good. Then kind of the next week's schedule, Power Up. We've shifted, we're doing a lot more scripts and practicing and saying things. So like, what should you say as soon as someone answers the phone as you're calling your sphere? What's your script? You haven't talked to them in a while, what do you say? Things like that. We already talked about team meeting. Next week, we're going to talk about working your database. Because of Lucas, he's building his database, and I'm like, oh, we got to get closings out of this. So he inspired me. We're going to talk working your database. And then also, if you're supposed to be doing case studies, starting today at 1 o'clock, Jeanette is going to do office hours with case studies. Jeanette, the everyone, if you haven't done your case studies, there's 5 of them.
Part of the 30, 60, 90.
Yep. If you don't know what I'm talking about, you probably haven't done them.
Yeah.
They're fake offers
Okay.
and things like that. So it gives you like a scenario, like here's the house, you have to make an offer, here's what your buyers want to offer. And then you have to write up the offer and send it to Jeanette. She'll look over it, make sure it all looks good and that you're doing it right. And so there's 5 of those, I think, a couple of buyers, a couple of sellers, kind of an idea. So you can get an idea. But so Thursday at 1, she didn't tell me if it's in person or not. I'm assuming it's just here in person. We'll see if we can add it to Zoom as well. But so if you're working on those, great thing to come for the next couple weeks.
Is that every Thursday or just this Thursday?
Every Thursday, she's gonna start doing it. Yep. Brian, come on up, introduce yourself. I wanted to bring Brian in because home warranties are a big part of transactions. When you list a home, you should ask for a home warranty because Brian will do it for free. Maybe I'm stealing his pitch. You will get a home warranty for free for your sellers while it's listed. And then when you have a buyer that buys a home, it's really easy to add on. So then it's covered for a year or 2, whatever you decide. And so I'm still.
Perfect. No, that's perfect. I'll just let
Sit
you talk.
down.
I know, right? So, no, awesome. I appreciate that, Cam. So, yeah, Silverback Home Warranty as you're working with your listing clients and also your buyer clients, right? On the listing side, it's free to you, free to your clients. It's at our black back plan level. And really what that's doing is while the home's on the MLS, if something were to break, we're gonna cover up to $1,500 in repairs for the home. We do ask, we do this for a couple of reasons. Number one, we want to support you in your business. Number two, it also gives us a way to work with the buyer agent as well. we do ask that you put in the description that the home is covered by a Silverback home warranty. And then you'll get an email when the home goes under contract. We ask that you click on the little link, provide us with who the buyer agent is and their information. And we'll reach out to the buyers and kind of explain why they should continue on with the Silverback home warranty. There's a lot of good reasons why. Number one is, one thing that to understand on the other side of the home warranty, when you're working with buyers and you get a home warranty for them, a home warranty, no home warranty company is going to cover a pre-existing condition. So if there's already something wrong, broken on the home when your buyer buys it, the home warranty, no home warranty company is going to cover that. And so that's something to think about as you get the inspection done. If the furnace is broken, if AC is broken, work with the buyer agent and or the listing agent and getting some things repaired beforehand. But if they have listing coverage with us and something breaks down during the listing on the MLS and we repair it, we've already done that work. That part's not going to be pre-existing coming into the buyer side, right? And so there's a lot of good positives for why a buyer agent, if there's listing coverage with us, they're going to want to transition that over to the buyer side. And it's very simple to do. We have 3 different plans. I've got some of these in the back. This is a really nice little 1-page sheet that you can keep on your desk by your computer that goes over what the different plans cover. We have a $400, a $500, and $600 plan. A lot of companies increased their pricings last year. A lot of them are increasing again this year. We're committed to keeping them the same. And so we're 4, 5, and 6. We also have free service call coupons. Your client's first service call is on us. We want them to use the home warranty. We want them to file a claim because we want them to be clients for life. Year after year after year, renew their home warranty with us because they see the value in having it. And then we also do our welcome phone calls with all your clients as well. So a couple things to keep in mind there. Questions about home warranty as you're getting into real estate?
Some specific examples, Brian,
Yeah.
of stuff that might
Great.
happen during this.
Great question. Yeah, during the listing period, let's say their dishwasher breaks. You know, that's something that we'll go out and fix. If their air conditioner breaks, we'll go out and fix that. Electrical items, plumbing happens probably most often on listing coverage. It's a toilet starts leaking or there's a little leak with the pipe or something. Yeah, so those are common ones that happen with listing coverage. It's not going to cover, a lot of agents will ask, and I had somebody reach out yesterday saying, hey, the inspection came in yesterday and they were scoping the pipe and actually broke the pipe. Would listing coverage break to cover that? What do you think? No.
Make that inspector pay for it.
Inspectors probably got insurance that should cover that, right? And so it's got to be normal wear and tear, right? But yeah, I mean, listing coverage, it's free. And when you submit listing coverage on our website, your clients will get an email that will say, hey, your agent is taking care of you by adding coverage on your home. So it is a little, it's really puts a positive light on you with your clients. And we
have like a 20-year-old furnace
Uh-huh.
and it just goes out during that
Yeah.
period. What do you guys do?
So it depends on what the repair is, right? So age of the appliance or furnace doesn't matter as long as it's in working condition when they get the coverage with us. And so if it goes out, so every home warranty company is going to have limits. We call ours true limits, where we'll show time and time again that we'll pay out to our limits. On HVAC, it's $2,500. Well, on listing coverage, we pay up to $1,500, right? So, yeah, it depends on what the fix is. If they have to replace it, there could be some out-of-pocket costs. Home warranty is there to fix things, right? And for most fixes, we're going to cover fixes pretty much 100%. Once you start getting into replacing, yeah, your clients might have some out-of-pocket costs. And that's something, as you're talking with your clients, that you want to, as you're talking about home warranty, make sure they understand the home warranty is there to fix things. Replacements could have some out-of-pocket expenses.
Thank you.
Yeah, great questions.
And this is something that you can negotiate within the contract.
Yes.
So you can put it right in there, that the buyer's gonna select it and the seller's gonna pay for it.
Yep.
So
That's,
should be free to your buyers too.
yep. And if you're in a situation where, you know, you feel like you can ask for more from the listing agent, like we do have some agents that will ask for
$1,000 or $1,200 on a home warranty and they might get a 2-year policy. Or what happens is if you ask for 1,000 and there's $600 for the home warranty, there's $400 buyer credit in our system. And they can use that towards service call fees, any out-of-pocket costs. If they don't use it in the first year, they can use it towards their renewal. And so we're getting more and more people, especially as other home warranty companies are increasing their prices a little bit. Some are at $750 now. Agents are starting to ask for a little bit more and use us, ask for get $600 for the home warranty, get the rest for your clients for anything that comes up. So. And great. Awesome.
Thanks, Brad.
Thank you. Enjoy the donuts and oranges in the back there, so.
Thanks.
When I bought my very first house, I was like, I'm not gonna get a home warranty. I don't need a home warranty. Like, I did an inspection, it looks good. The day I moved in, the AC went out in July. So I'm like, I'm in my new house and it's 90 degrees at night. I'm like, great, this is awesome. Called an AC guy, it cost me $900. So I'm like, I could have got a full home warranty for the full year for less money than I paid to fix my AC. And I'm like, this is so dumb. Why don't I just get a home warranty every time? Because the seller probably would have paid for it too. I was just being dumb, so. Yeah, Brian's good. If you guys have questions, SoulbackHQ.com. So it's good.
Thank you.
Thank you. Okay, let's jump into home loans. We got Eric, who's gonna sit back and judge Jake. Is that why you're here, Eric?
You see me taking notes.
Yeah,
So.
yeah. And
Nope,
Jake is
I
gonna
don't-
dive in. So all of your questions, everything that you want answered, that's what they're here for.
Yeah, super informal. This isn't structured in any real order. So I'll start going through some things, but if you guys have questions,
Wait, what are rates today?
you want to tell them? 6.875 on conventional, 6.25 on FHA and VA.
Can we put a little note on that?
Yeah.
So when Jake sends those out in the morning, those are like really boilerplate rates, right? They're meant for you to just like, every day you're getting kind of a feel for where the market is and you can track a little bit day to day. Different clients will qualify for, for different interest rates depending on, you know, their credit score and down payment and stuff like that. So you might see a rate a little bit lower than that once we actually talk to the client, or maybe their credit is shot, right? So their interest rate is a little bit.
Yeah, so in my message, you'll see I put average rates on there. That's kind of why. Because we are pricing it out. I wouldn't say an absolute best case scenario, but pricing it out for a buyer that's in a pretty good situation. So if you have a specific buyer that is in a little more unique financial situation, maybe just message me and say what would this specific one be like on the rates, and I can do that pretty easily. Good question. I don't know if you care to see us on here. I threw us in here just in case you wanted to get some contact information.
That was Jake in high school.
And I'm gonna keep that until the very end.
Is that your mugshot, Eric?
Yeah. Wouldn't it be great if they let you?
Really, Sue.
Yeah, they did a little touch up on it.
They might, man. You just need to be in a bigger income bracket, you know? Okay. So in talking with Cameron a little bit, he kind of wanted me to just go through the process from A to B, and we probably won't cover that entirely in this, but I thought it was important to understand, like, well, first of all, should somebody get pre-qualified or pre-approved before you're too serious in taking them out to see a house, or getting too far with them in doing their anything on the buyer side? And so the answer to that should obviously be yes. You want to make sure that they're qualified before you're taking somebody out and spending a bunch of your time with them, right? So you'll hear the terms pre-qualification or pre-approval thrown around a bunch, and they sound similar. But in my world, they're a little different, as far as how we approach talking with the client. So if you send somebody over to us and they just want to get pre-qualified, that typically means it's going to be a lot more informal, right? So they're just going to be asking some questions. Maybe they're not super serious yet about buying a place. They're just want to get a feel for things. And so we can still do that, and I'm happy to talk to anybody. But just know they're probably not going to be doing an application in this scenario. Most likely, we're not getting any paperwork in, like income documents or pulling their credit, anything like that. We're not doing what's called an automated underwriting system approval. So you'll see this acronym AUS. So essentially what that is when we do have a full filing for somebody, we have to run it through an automated approval system. And that's what tells us if they're good to go or not. That's more on the pre-approval side. So we don't do that obviously on a pre-qualification, and we're not going to be providing a pre-approval letter, which is important because that's what, when you get out and start shopping with people, and if they want to make an offer, you're going to need a pre-approval letter in most cases, to submit that offer and actually have it reviewed. Any questions there?
AUS.
So yeah, AUS is the automated underwriting system. So when we get a full file in, pull credit, look at their income documentation, we submit it through this automated approval system. And that's what gives us, it'll be a flag it and say, no, they're not eligible for X, Y, or Z reason, or yes, they're good to go. Get them out shopping. Eric.
So the more common term when you're submitting an offer and you're talking to a listing agent, or even if you're the listing agent, right, and you ask the other agent, have they at least gone through DU, right? DU is like the common name for the automated underwriting system. It's the automated underwriter for Fannie Mae. Right, but there's a few different systems that we can run stuff through. We call it AUS because there's 3 or 4 that we can do, but you'll probably most commonly hear it referred to as DU.
Stands for desk.
What's the difference?
Yeah,
Which DU?
Yeah, DU stands for desktop underwriter. Freddie Mac, the other big investor, they have their own. It's LP, I think it's called Loan Prospector. Yeah, there we go. So if you hear LP, it's the same thing as DU.
DU stands for.
Desktop underwriter. It's for Fannie Mae. They're one of the 2 big conventional loan investors. And then LP is Loan Prospector, and that's for Freddie Mac.
You will more commonly hear these from the lenders.
Right.
So they'll say something like, oh yeah, they just went through DU and they're good.
Or
You
we'll,
just say, okay, they're good.
yeah, we like to put it on the pre-approval letter as well, so that when you're submitting it to a listing agent, they can see that it's been taken care of, that box is checked. Any other questions on these 2 things?
Is it different qualifications for different loan products? And what does that kind of look like?
Yes.
I have a slide.
So, well, I do.
Okay, I can hold the question.
Yeah, we do. So I do have a slide for that. This is one that also Cam thought would be good is, should we encourage a buyer to shop rates or companies? What do you guys think?
And to use that dog, it's one of the things that they teach us not to stay with one person.
Sure.
At least provide information, maybe different, is a whole decision.
Right, and you can speak to maybe what the guideline is on that, but I guess if they're asking you, hey, do you have somebody? I think you do have to provide like a couple, is that right?
Yeah, you should.
but that's real
But if-
gray, that should.
But if they don't ask, like if they just already have somebody, I guess that's what we're talking about. If they just have, you know, they have somebody that they're already working with. Should you encourage them to talk to somebody else?
Absolutely. As a homeowner and investor, I always talk to a few different mortgage brokers because you can get, people just have different ideas, different perspectives, and finding a good fit is really helpful because as the process goes along, if you trust your mortgage lender, then you're a lot more likely to stay in the game than if you're
Absolutely.
jitters and you're not trusting your lender, you might pull out.
Absolutely. And as an agent, trusting the lender is huge, right? So if they're bringing you somebody you don't know, or it's a credit union that you've had a bad experience with, or whatever it might be, you can have confidence in referring somebody that you've done business with, you know how they work, you like them. That's really important.
I have a very general statement that I probably shouldn't make, but I've had a lot of bad experiences with credit unions. So when someone says, I'm gonna go to my credit union or my bank, typically that's a like red flag in my mind that we are not going to have a good experience. Not to say that they're not great or good people or whatever, but usually I say, let's go get another one, because loans are sold, right? Anyone that owns a mortgage, you probably get a letter in the mail that's like, okay, now,
Now
someone
you're with
else-
Wells Fargo.
yeah, and you have zero control once you have a loan. So some people are like, oh, I want to keep everything all in with my bank. But that's not necessarily the case. It might be, but it might not be.
Can I ask something about the fiduciary?
Yes.
So we're mortgage brokers, so we actually, in the background, we actually run quotes for the clients from up to 22 different investors, right? So we're looking at different places.
What's Security National?
So does everybody know what the three main lending types are? So there's a bunch, but there's usually three places that people can get their money to buy a home. One would be an institutional lender, that would be your banks and credit unions, right? They're huge organizations. The second place would be a retail mortgage bank. So that's a non-depository institution that just does mortgages.
Like Security
Like
National?
Security National or Guild, who was
Intralink.
formerly Academy Mortgage, not Intralink.
Not Intellect, what's the
Um,
Intercap? That's
And
the one.
Intercap would be one,
There's a bunch of them.
yeah.
First
they're-
colony.
First Colony, Veritas, right? So they borrow money from the banks to lend out, and then they do the loan, and that's where you see, hey, welcome to Wells Fargo.
Yeah.
Right? You close your loan with First Colony, welcome to Wells Fargo or whatever. The third main type would be a mortgage broker. So a mortgage broker, we're, like a liaison between you and your client and wholesale interest rates. So, we take, instead of like First Colony, for example, that has their product that they offer, which they're probably, they're getting from, you know, we take your client and we don't shotgun them around like if you're shopping for a car, right? You'll see like 85 different credit pulls on your credit. We take the information and we're approved to get money from, right now we're up to 22 investors, right? So, with our software, we take the information, right? We look over everything like a normal pre-approval, and we click a button and we can see all of our investors' rates. Part of being a professional, well, professional invasive. We know all the guidelines and stuff that go with each investor, right? But we're able to shop for the client to find the best terms available to them. And I think that's a pretty big difference with what we're dealing with at Aries. From what you'll get with your Intercap and your credit union, things like that. But I don't know, because we are shopping different investors, does that satisfy a fiduciary if we can send quotes for different investors?
probably, the whole idea is we don't wanna steer anyone and almost force them to use a certain person. And so get very far away from anything like that. Worst case scenario, I would say have, like these guys, a broker who's gonna shop a lot of them, and if they're like, I wanna talk to another person as well, then you can also, excuse me, donut. You can also talk to like Security National or someone that
Yeah,
is, what do you call them? I already forgot.
they're a retail.
Retail.
Mortgage bank.
Yeah,
If anybody wants to know, like, after, even though I just went into a little bit of detail, like, no, I'll give you like, there's positives and negatives to each of those lending types. And we'll happily cover those for you guys, so we're not sucking up your whole morning for that. But that's, yeah.
I just feel like in my experience, I always get a better rate from the mortgage broker.
You should.
You should, but honestly, it depends on what you're looking at. I was talking to a listing agent this morning and he was asking me about ARMs, so adjustable rate mortgages, right? Of the three options that I just gave you of lending types, two of the three of those, we have horrible adjustable rate mortgage loans. They're not good because of what happens on the back end of those loans. If you go to a credit union, dude, sometimes they get really good terms on those, right? It'll be a root canal to get it, and you're obviously didn't live through the mortgage crisis if you're getting into an ARM, but there's
I didn't know they did this stuff.
there's pluses and minuses, right? And we'd be happy to be truthful enough with you to tell you why we're the best.
But this is another good reason I feel to just give your client 2 to 3 different things, because the client can do the research and find for themselves, like, you guys are the best fit for this. I don't have to know exactly, like, on this particular loan, you wanna go with these guys or these guys, because if I just give them 2 or 3 names, they can do that research, right?
I personally like
I know.
giving people options.
Yeah.
But I also, so like even for myself, when I when I redo my insurance every year, I shop a couple places. I call my main person and I ask him, right? And I ask, that's who I bounce my ideas off of. But I still, I'm a consumer too, right? So the important part about being a fiduciary is you have your client's best interest in mind, right? So if it's 2 people, if it's 3 people, if it's 12 people, you need to do what you think is right that'll best serve your client. Did I make that more step?
I think you did. I'll put a bow on it by saying credit unions and banks are really good at doing credit union and bank things.
Yeah.
Which is a lot of stuff, right? But they're not specific on mortgages all the time,
the
so.
only reason I would use a credit union or bank is if they have a very specific loan product that no one else offers. Like a 10% down investment loan. I've heard credit unions offer that. I've never seen one in real life.
Or look, Mountain America has a pretty awesome first-time buyer program right now that we can't compete with usually. So if
you're
there's
gonna
something
use
like that,
Like that, I would just give yourself a little bit more buffer room in your deadlines.
yes.
Like a little bit longer.
Like
for
about
financing
30 days.
appraisal. But they are very slow.
Yeah.
These guys will get loans done in a couple of weeks, yeah.
Wow.
If,
And then
if needed and it's the right client, yeah, we can do it very quickly.
credit unions, the same person would probably take 45 days. So just give yourself more time in that scenario.
Yep. Cool. Any other questions, comments? Okay. Loan program. So this isn't gonna be every loan program. I didn't want to take up the entire day. But these are kind of the 4 main ones that you'll hear. Probably more often, you're gonna hear the first 2. And then VA, you'll probably work with some veterans or active military. USDA, I don't know if Eric does many of those, but I've done quite a few myself. In this area, they're not as common, and I'll explain why as we move on through these slides. But This should kind of help answer Cameron's question earlier of the different qualifications for loan programs. So these will be kind of, I took some highlights. This isn't every single thing you need to know about these specific loans, but some of the more important things, in my opinion, or things that are more useful because you'll probably get some of these questions more often. So conventional loans, they're great. Everybody loves a conventional loan. A lot of sellers or listing agents want to see a conventional offer come in. Mostly because they feel like conventional loans, the borrower's a little more qualified, even though that may not be the case always. They just like seeing conventional loans, a little easier guidelines in some cases. But important things to know, down payments, you can get as low as 3 or 5%. And that can depend on if somebody's a first-time buyer or not. They don't always have to be a first-time home buyer to get the 3% down. But typically that's what we're looking for, to get as low as the 3% down payment on a conventional loan. If somebody's coming back and they're buying their second home, or they're selling and buying, minimum is going to be a 5% down payment on a conventional loan. Any questions on that part of it? Okay. Minimum credit scores. So we'll put this on here, but what I like to tell people is that just because you hit the minimum doesn't always automatically mean you qualify. We still have to run them through that automated approval system, the AUS. But depending on the company and the lender that we look at, we can go as low as 620 on a conventional loan. You may not get the best terms, but we could still do it. PMI. Everybody know what PMI is, private mortgage insurance? Anybody need me to explain that one?
How much does that cost nowadays?
PMI? It depends. Yeah, depends on the amount of the down payment, what their credit score is, the number of borrowers on the loan. So you tend to get better pricing on PMI if there's multiple people on the loan. Their debt to income, yeah. So I would love to be able to give you an answer, the direct answer on that, but the answer is that it depends.
On the next slide, so it's gonna be the same.
Yeah. So do I always have to have PMI on a conventional loan? No, if somebody's putting 20% down, they're not gonna require the PMI on there. I didn't put this in the slide, but also if somebody's putting 5% down, they technically don't have to have PMI either. The catch there is that they're paying an upfront fee to have that removed. So it's an additional closing cost, a one-time fee. And that's not a set number either. It can depend on all the same factors, including the term of the loan, which is on here too. So if the shorter the term, the better the PMI pricing. It's all about risk to the lender, essentially.
If someone has a low credit score in their mind,
Okay.
how would best they know if they have something high enough to qualify? Like a Credit Karma, is that okay? Should they go to Experian? Do they talk to you? What would be good if they're like, I don't even know if I have a credit score that fits?
Talking to us would be fantastic because we can do a soft credit pull that gives us virtually the same information as if we were to do a hard credit pull, and it doesn't impact them at all. So if we can get to that point, I love that. But I tell people Credit Karma is really good for monitoring your score. I wouldn't always trust what the credit score tells you on there. It's probably more accurate in my experience if somebody's in like the high 700s or 800s, just because that typically means there's not as many things going on with their credit and it's easier to calculate. But the lower the credit score gets, I definitely wouldn't trust Credit Karma. Banking apps or credit union apps are a really good place to look. Almost all of them now have some sort of credit monitoring service in them. That's probably going to be a little more accurate than Credit Karma is.
But you could do a soft poll so we could get real good idea if they're there or what they should do to get on that path.
Yeah, and I would encourage your client, whether it's with us or somebody else, to get to that point as quickly as you can, especially if they're trying to buy like soon. With, you know, like within the next 30 to 60 days. And they say, hey, credit might be a little rough. It could or it couldn't be, but the best way to know would be to do that. So if you get them to talk to a lender, I would also make sure that the lender has the ability to do soft pulls. Most should, but we definitely do. We want to qualify them without having any sort of negative feedback. Because most people are super protective of their credit score, even if it's really bad. And so we understand that. We want to make sure that it's like a safe space.
Yeah, by the way, if you're shopping lenders and you get pre-approved or do a hard credit pull, that's okay with most lenders.
Correct.
They look at that as, oh, you're shopping, not, oh, you're pulling
It's-
your credit.
The
above.
caveat to that is it's within 30 days of the original credit pull. So if they went to their credit union and got their credit pulled, they have 30 days from then to do as many hard pulls as they want. And the credit bureaus say they'll only count it against them once. Sound right?
Yeah, yeah. One of the major benefits of doing those soft credit pull, at least for pre-approval, is the credit bureaus, when you get your credit pull and it's a hard inquiry, they sell that information. So your clients will get just bombarded with calls, texts, emails. So soft credit pull is nice. It doesn't happen.
Gosh, what a business model. They just made up number. And people have to pay for it and worry about it and then sell it off and.
I'm gonna circle back just real briefly on,
Yeah.
you asked, or maybe you made up a good point, which was, people either check their credit usually from their bank or, right, because it comes off like a credit card statement or Credit Karma or whatever the free service is. Depending on the type of product that you're shopping for, when your credit gets pulled, it's a different algorithm. They call it a FICO model that gets sent out to their credit bureaus. Because every industry is weighting, like they're analyzing your risk of non-repayment differently. So, it's different for a car than it is for a home, than it is for a credit card, than it is for an installment loan. So what we pull on the mortgage side is very specific to mortgages. So if somebody says, I got my, I see this almost every day. You know what? I just did it with Credit Karma. I'm at least in the 740s, because that's where it was. And it's either bang, a 680 or like a 780, right? There's just like this variance because of how we're thinking about them not repaying us, which is our biggest concern, right? Because it's harder to take a house back than it is to take a car back, than it is to just turn off your credit card, right? So.
Right.
That's one of the things that we want to, we on our side educate people with when we're talking about credit scores and why we need to look at something specific to buy a home.
Great point.
Sometimes.
Or you could just be making it up.
No, I wasn't there. It's like a Spider-Man that was coming down.
Okay, last thing I'll touch on this slide is the debt to income ratio. Everybody understand what debt to income ratio is? So with a conventional loan, I put on here up to 50% of their total debt to income ratio. So there's two different ratios that we look at in the mortgage world. Sometimes they're referred to as a front end ratio and a back end ratio. The front end ratio is the comparison between their gross monthly income and what's it going to cost for the mortgage. So what's the mortgage payment? So there's that ratio, and then their total debt ratio, which is the mortgage plus any of the other debts reporting to credit credit cards, loan payments, any of that stuff. So we combine those two things and compare it to their gross monthly income. That's what I'm talking about here.
Before taxes.
Correct. Gross monthly income before taxes. That's a very important distinction, because a lot of people will, when you're asking them, or if you ask them what their income level is, they'll tell you the after tax. Oh, I bring home 1,300 every 2 weeks. That's probably the after tax. So we want to get to what the gross is, the before tax, because that's what we're qualifying them off of. Make sense? Any questions? Okay. So that ended up kind of funny. The FHA loan. Okay, so minimum down payment here is 3.5% across the board. Doesn't matter if they're a first time home buyer or not. Can go as low as 3.5%. I put a minimum credit score on here in most cases of 580. Some lenders are gonna have different overlays or things that they won't allow. So some of them might not go that low, but also some of them can go as low as 500 on the credit score. Those are gonna be very unique cases, typically, because they have to have a lot of other compensating factors if we're going that low. One of which is a 10% down payment. So if you find somebody that says they have a 500 credit score, but they have a ton of money, it's still worth getting them in and seeing if it runs through that automated approval system. Does that make sense? Okay. Mortgage insurance on an FHA loan, it acts the same, it's just called something different. So it's called mortgage insurance premium, so MIP instead of BMI. It's gonna be the same thing as far as the monthly payment goes. But FHA does have this thing that drives me crazy called upfront mortgage insurance premium. I get it, it's a government sponsored loan. So basically they're taking their little chunk. So what they do is they charge a premium upfront, a one-time fee that they add back into the loan as it's closing. So you'll have your 3.5% down payment. And then they add a fee that's equivalent to 1.75% of the loan amount back in. Does that make sense to everybody? A lot of lenders will forget to tell people this, and then it comes up and at the end, they're like, what the heck's this charge going on? I'm not saying that I'm perfect, but I try to mention that every single time so that there's no confusion at the end. I've heard that complaint a ton. Everybody understand the difference between those two? MIP is the monthly, upfront mortgage insurance premium is the one-time fee.
If you could go conventional, is there any reason that you would ever want to go FHA?
Yeah,
Like if you have like 5% down and a good credit score, would you ever want to go FHA?
yeah. So especially right now in this market, FHA is gonna have better interest rates. And they may also have better PMI or MIP rates to help your payment be lower. So I think there's definitely a reason to at least explore that option.
Yeah, so like if you have 5% down and that's like all the money in your savings account, maybe it's better to put 3.5% down. Get a little bit better rates, go FHA.
Yeah.
And then save 1.5%.
Yeah, so and another unique thing about FHA, let's say this person has a lower credit score, maybe. They have the money, but maybe their credit score's, in the mid 600s. You're absolutely gonna get a better monthly payment going FHA, because they're a little more lenient on how they look at mid-range or lower FICO credit scores. So the credit score itself isn't gonna impact the PMI on an FHA loan like it would on a conventional loan. Their PMI or MIP is determined by the amount of your down payment. So, yeah, but
With an FHA, you have to have mortgage insurance always?
always, even if you put 20% down.
Okay,
Um,
that was my.
The catch there is that it will be a little lower if you put more down. So anything above 5% on your down payment, And then if you're getting a lot higher, I think it goes down even more if you're putting 20, 30, 40% down. But with FHA, they do say that if you put at least 10% down, it will fall off by itself in 11 years. But most people aren't gonna make it 11 years in the same mortgage. I think it's the average is 3 to 5 years, whether they're selling or refinancing, but it technically will fall off on it. Good question. Yeah.
So are the underwriting guidelines stricter for FHA? Like, I know you have to have certain type of housing, you can't, like, it has to be better overall or something. Can you talk about that?
I wouldn't say that they're more strict than a conventional loan. It's kind of case by case. They can be more strict in certain ways and less strict in others. But I think what you're referring to is like the quality of the home.
Yeah.
So that would be, I mean, it's reviewed by underwriting as well, but that's more of an appraisal thing. So, the appraisal, they do want the house to be in better shape overall. But really the biggest things that come up on an FHA appraisal are gonna be like chipping and peeling paint. I mean, that's probably the most common one that we see.
Handrails if there's more than 3 stairs.
Yep.
Yeah,
Anything safety related though is gonna come up on both conventional and FHA. So like the handrail thing, or if it's like an electrical outlet issue or exposed wiring.
FHA will require floor coverings and conventional.
Or cracked windows, I guess FHA flag.
Yeah.
Convention's okay with that.
It used to be cracked cover plates. Yeah.
Yeah, so, well, something else cool with the conventional appraisal, while we're talking about that, is they will let you do an as-is appraisal. So if FHA will not, conventional will. So they'll adjust the value of it according to whatever repairs need to be made. But they'll still give you appraisal without it being subject to X, Y, or Z repairs. So that is a thing with conventional. It's something, it's another reason why conventional is preferred, especially by a seller or more specifically a listing agent. Like if you guys find yourself in that situation and you know the house might need a little work, you're probably gonna prefer a conventional offer over an FHA offer.
Because if you as a listing agent get an FHA buyer, then you will have to make those repairs that the appraisal points out. Is that what you're saying?
In the FHA addendum, there's a line that says how much you'll spend towards repairing things to make it FHA approved or whatever. But every single time that's ever come up, we say, sellers make all of these repairs, no matter what the number is we put there. And so it kind of goes back into negotiations there.
Yeah, because you have to, like, if it comes up on an appraisal, you have to get it repaired, or else the loan can't close.
And an FHA appraisal sticks with the property for 6 months.
6 months.
So
Yeah.
even like a low appraisal or something like peeling paint or something done like that. Next person, if they get an FHA loan, they will use that same appraisal. But
Yeah.
not with conventional.
Yeah.
So if you have a crappy house and someone gives you an FHA offer, you probably don't, want it as much as a conventional.
Or if it's the only offer you're getting, you can talk to me or Cameron and say, I have concerns about this and this. Is that gonna come up on an appraisal? And honestly, sometimes it doesn't. So there might be some chipped and peeling paint that they don't catch and it gets through. So sometimes it's
I've
just
had
what
my
comes up.
sellers put plants in places and things like that, so they
They
don't
can get
Like
creative.
we had a cracked window, it was just in the very corner, I was like, you
Yeah,
know what, put like some little picture over in that corner so the appraisal doesn't see it.
yeah,
We didn't, so we didn't have to replace the window.
yeah. So you can get creative.
Yeah.
Last thing I'll say about FHA loans is another reason to look at them is you're gonna be able to have more flexibility on the debt versus income ratio. So especially right now with affordability and people not being able to qualify for quite as much. I do a ton of these right now, a ton of FHA loans. And it's because we can squeeze every last penny out to get them that $450,000 home instead of the 425 or whatever it might be. So you can see here, front end ratio that we talked about, 47%, and back end ratio up to 57%.
So in like a house hacking situation, if I wanted to do one soon or whatever, when can I like move out and get another one, like another house?
Another mortgage.
Yeah.
Good question. So when you're signing on the property as your primary home,
Yeah.
you're saying that you're gonna live there for 12 months.
Okay.
So you have to be there 12 months before you can
Okay.
rent it out. The house hacking is awesome, but with an FHA loan, you have to be very careful. Like if you're planning on getting another FHA loan, in most cases, you can't have multiple FHA loans at the same time. Okay. There are certain situations, well, where they'll make an exception. But that would be like if you're trying to move, I think it's 100 miles away from your current property, they'll allow it, or if like your job's making you leave to go somewhere else, which kind of also fits into that 100 miles away category. I mean, you can still get another FHA loan. I guess I should say that you can still get one, but if you're trying to use rental income from the other property, that's where you want to be careful, because we may not be able to use the rental income. If we're trying conventional, they don't have that rule at all. You can buy the house next door.
It's what's called underwriter discretion.
Yeah.
So you just need to paint a good picture for the underwriter as to why.
Yeah.
You're doing another home loan with a conventional, which usually isn't very hard.
Yeah, and you still run into that rule, even if like you buy your first home FHA or conventional, but if you're trying to buy the second house as an FHA loan, you're gonna run into those issues with the rental income and the house hacking.
Can you rent it like straight from day one, or do I have to wait 12 months?
You could rent out like a portion of it straight from day one. The key there is you're saying you're gonna live in it as your
Yeah,
primary
so
house.
I stay in one room, the other.
Yeah, absolutely.
Okay.
Yeah, or like if there's an ADU, an accessory unit on the property, you can do that FHA or conventional and use that rental income to qualify. It's a great question. Anybody else questions on that or anything else on here? Yeah.
Let's say I have a buyer that doesn't match one of these few things, like low credit, maybe their income's not there. How can we get creative and do that? What are like our options?
To get them qualified for more or in a better situation?
Yeah, whether it's more or like they don't have the down payment, they don't have the income, they don't have credit, like. How can we look at some of the things?
Great question. So here's the slide I had on that. So, we want to be as problem solving as possible with these people, especially if they're borderline and trying to get qualified for a little more or just anything. We talked to them about adding a cosigner, and that can be somebody that's living with them, or it can be somebody that isn't, like a parent or a friend, sibling, something like that. We can try to figure out other sources of income, like maybe they only told us about their hourly job that they work. We can, if they're receiving social security income of any kind, a pension that we can get monthly income from, child support, alimony, any of that stuff we can try to use to help qualify for higher.
Quickly get married and then.
Yeah.
Get a divorce.
Yeah, exactly.
We've done it for me.
Freedom card work that way too.
Yeah, asking for gift funds is a good way to do it, like if everything else is okay, but they just need some money and they don't qualify for any of the down payment assistance or grant stuff. Seeing if you can get gift funds from, I mean, just about anybody, honestly, as long as we paint the right picture, like he was saying. Friends, family, any of that stuff.
Is there a limit on that amount?
On the gift amount? No. No.
Hey, I wondered about this. I saw this in my course education. They said that an agent can dedicate some of their commission towards the down payment. Like my niece wants to buy a house, and if I help her buy a house, can I dedicate some of my commission to her down payment?
Absolutely, yeah.
is there a limit on how much, or,
You have to be really.
yeah?
Yeah.
So if it's, you
Yeah.
always have to be related?
Yeah, because gifts have to, it goes with the family relation.
Okay,
You could go with the best friend route, but I've never had one of those accepted. It's, you're an interested party
Uh-huh.
to the loan, so
That's another underwriter discretion thing, the best friend thing. It's better if you're family, but
you couldn't do it for like car. Right?
What about like a second cousin once removed?
yeah, is that how?
You're probably shocked. They have pretty specific guidelines for most loan products, especially with you as an agent trying to give a piece of your commission
Uh-huh.
toward the down payment. You could do it toward closing costs, but not toward the down payment.
yeah, so that,
Unless you're direct.
that's the caveat to your question is,
Yeah, I have another question.
Yeah.
I think we talked about like my son lives in Vegas, so if he wants to purchase a home in Vegas and I connect him with it. You know, Keller Williams agent and I get a referral fee, can I give that back to him so he?
Yeah.
He can use
Yeah.
that because it's a different state?
yeah,
Doesn't
it's
even matter.
still just, yeah, you're still just giving him a gift as a mom to a son.
Yeah.
Okay. But like niece is okay, I could do that for her down payment, or does that have to be like parents?
I think niece would be okay.
I think I'd want to double check that with an underwriter.
It might depend on the loan program too.
Because
But at minimum, I could say towards closing costs.
yes, because you're an interested party to the transaction. There's different rules to giving gifts. So,
Basically, if you weren't an agent in the transaction, it would be different. right?
yeah, if you weren't an agent to your niece, no brainer.
But in that situation, you wouldn't be giving her your commission, right? You'd just be giving her a gift.
And
You don't need to tell them.
can we use, like, if I go buy a property, I go get an FHA loan, I could use my 3% commission, so I'd only have to come up with 0.5%, correct?
Yep.
Yes.
Okay.
Assuming you were gonna get it.
Yeah.
Yeah, that's what I said, buy a broker and stuff, so. I thought it was like that.
You want to check with you first.
Cool. Any more questions about gift funds? Okay. And then finally, I mean, this is something we try to do with everybody if they need it, is the credit improvement game plan. So maybe getting them to a higher credit score helps them get a better rate or access a different program that might give them more buying power or better qualifications.
What kinds of things would you do for them?
So when we do run somebody's credit, whether it's a soft pull or a hard pull, we have software that we can simulate doing different things to their credit, like paying down this debt or getting a new credit card or removing this debt collection account. And so we'll kind of outline those things and show that to them. I personally will give them a printout of it and say, here's the 4 things that you need to work on over the next 6 months or whatever it is. And we follow up on that, but obviously it's them that has to do it, right? So, and we can let you in on that as an agent in case you want to help kind of push them along too. Does that answer your
So
question?
you would suggest like, let's say I meet with someone and they're like, I wanna buy in 6 months. My lease is up 6 months and I can't get out, so I'm gonna do there. You would almost suggest start them talking to you right then, really early on, at least do a soft poll. So we know where they're at, we know what they qualify for, we know that they could qualify, and if not, we can make a game plan of where to go.
Yeah, unless somebody knows that their financial situation is immaculate, then maybe not, but if there's a question about this or that, absolutely. The sooner we can talk to them and give them a better idea, the better it's gonna be for everybody once we get to that point. Because if we don't, and we're just kind of taking their word for it, and we get to that month where they really need to buy because they're getting kicked out or whatever the situation, when we pull their credit and, oh, shoot, there's this and this, that you're probably gonna have to take another few months to work on. Well, now they have bigger issues, right? Trying to find a new place to live while they're figuring out how to get to the point where they can buy. So,
Question.
Yeah.
Do you guys look at like how much time they've been at their place of employment?
yes, yeah, so, very good question, especially if we're talking like a business owner versus.
Like
somebody-
everyone in this room.
Yes, so like everybody in this room. Dave, we've talked about this.
Yeah, you won't give me a loan. So if I have to pay money.
Yeah, I mean, that's a very important part of the process. So. We still always want to try to get a 2-year employment history. Doesn't have to be at the same place, doesn't be at the same type of employment, so W-2. Or your 1099 or business owner, we can, a combination of any of it. But if we're talking specifically 1099 or business owners. There, in some cases, we can use 1 year of that if you file taxes. But in most cases, they want to see a 2-year history of it. And have it filed on taxes, so that we can get, basically, they're trying to get the best idea of what your monthly income actually is. Because as a business owner or somebody who makes commission or lots of bonuses, that stuff fluctuates all the time. And so we want to be able to have a long enough period of time where we can get a good average of it. But yeah, like if we're just talking W-2 employees, 2-year work history still. They don't have to be at the same job for 2 years. Ideally, they're not bouncing around from job to job. With FHA specifically, they don't want you to have, I think it's more than 3 job changes in the last 12 months. Unless we have a good explanation for it. Another one that comes up a lot is I have these 2 jobs that I'm working at the same time. Can I use both incomes? It depends, that's the answer. So in that scenario, you have to have been working both jobs simultaneously for 2 years to be able to count it. So like if we have somebody doing their normal job and they do Uber on the side, we have to have it, both of them for 2 years at the same time. Does that make sense? Yeah.
Student jobs, does it count as a part of the history? of
It's
your
student?
history?
Student, like, if they're a full-time
A
student.
student, but they work up to 20 hours, but then they land a job and they do it for 6 months. So do they add up or?
Absolutely, yeah, so we can use their time spent as a full-time student as part of their employment history. In most cases, we just have to get a copy of their transcripts. So the school
Being a
transcripts.
student? But even a student not having the job or?
Correct, no, so just, I mean, if they had a job at the same time they were a student, great, we can just use that as their work history. But if they were only a student and then got a new job after they graduated, then we would use their time spent as a full-time student as part of the employment history. Does that make sense? Yeah, so we do have to prove it, right, by getting the school transcripts that say they were a full-time student at this specific university. But we can use it. And I think, did they open it up for high school as well now? We used to not be able to use high school, but. Yeah,
While we're talking about that, one thing, because it's very state specific, not very state, it is state specific. Because of the populace here, an LDS mission will not count toward your 2 years of job history. So if you have a younger buyer that's like fresh off the mission and they didn't work in high school or didn't go to school, with that 2 years that they were out, or a year and a half, isn't gonna count for job history.
It opens things up for younger buyers, so they basically need to have a job. And they need to have full-time student status for up to 2 years combined with their job, right?
Yeah.
mhm.
And then they can qualify depending on their credit and their income.
Yeah.
That's especially helpful for people that were in like a very intensive degree, like a doctor or a lawyer or whatever that might be. So they were only focused on going to school that whole time. But then they get their degree and now they're making a lot better money. I've helped lots of people do that same thing.
I have a question.
Yep.
So, like Utah, there's so many people in summer sales, and they make a ton of money,
Mhm.
and then go to school the rest of the year. How does that work?
Yeah, so that would be considered like seasonal employment. And as long as they've been doing seasonal employment for at least 2 years, it always comes back to the 2-year thing because. Again, they might be making a ton of money for 5 months and then no money for the rest of the year. That. Yeah, we can still use that as part of their employment history, even if they weren't a full-time student, as long as they had the seasonal employment for at least 2 years. We can count that.
So there's two things that we confuse sometimes, okay? There's your job history, in which we always need a 2-year history, right? Doesn't have to be in the same field like Jake was saying, but here's your job history, and then there's how you get paid, right? And there's, as long as we have this, your summer sales person, right now we have a loan program where we can use their bank statements. We can use 1 year of 1099, so if they did it for 5 months, we can do an average of their 1099 income. So there's options on how to average their income. There are not options as far as having a 2-year job history. You need, whether that's college transcripts or whatever, you need 2 years of job history. And then you have your income. So they're kind of the same, but they're two separate issues.
Right.
For how much do they get qualified?
How much?
Is the money? Because, I mean, having good grades, for having good grades or being enrolled, but for how much do they get?
How much of a purchase price on a home? That would depend on each person. So we would look at their, what they made of the actual income. And that's what we would base it off of. Does that make sense?
So for the college transcripts, they don't look at their GPA. They don't, right? They just want to see that they've been in school. So they look at the transcripts to see, okay, you went for this semester, that semester, right? They don't care how many units they took, right? They don't care if they completely failed out. They just want to see that they were in school. Yeah, that they were in school.
Basically, they're looking for what was the reason you weren't working for these 6 months or whatever it is. And if we can fill that gap with school, that takes care of the job history, but it doesn't affect the income, like Eric was saying. So the income and the actual job history are separate. Does that make sense?
Yeah, let's be like, okay. My dad,
Yeah.
my husband just told me, she's not making even 12,000 a year.
Okay.
She has been a full student full time, and maybe she's gonna have the 2 years like all together because she's like a mission. So serving a mission cuts the 2 years, is that what you said?
Serving a mission doesn't count
Doesn't
the
count.
2 years.
Okay.
Yeah, that's like a 2-year blank spot on your timeline of work.
Yeah, because she did 3 semesters before going on a mission, she went on a mission, but maybe she's gonna like the 2 years already back.
So how do they do that? Do they take the time before the mission and the time after and add it together?
Yeah,
Okay.
we've done several loans now for people that are refugees. So, yeah, Cody, yeah, he's got people from Afghanistan. And do you know how hard it is to do a verification of employment for somebody that had their previous employment bombed out in Afghanistan?
Wow.
You can't do it, but underwriters are pretty sympathetic to that, and by underwriters, the Fannie Mae, Freddie Mac, who governs FHA, Ginnie Mae, who governs VA, they're sympathetic to that. So if we can Google that there was a business somewhere, or we can get some sort of documentation together, they usually just go, cool, right? I wish underwriting would see that for LDS missions. That is work, right?
Yeah.
That is some hard volunteering, right? But they don't, they just see it as, I don't know, like, so.
Unique
right.
issue.
It's huge, yeah.
I want you guys to take something away huge here is these guys know what they're talking about. Almost every lender does, not to just single them out, they're great.
You should see what's up.
Yeah,
absolutely.
they're the only ones that know all of this. And so as you're talking to people, if someone's like, I would like to buy a house at some point, they have some roadblock in their mind that is stopping them. Right? Their credit, their income, they might not know that they can get a house because I just got a job right at school.
All these questions, yeah, all,
Your kids could buy a house.
Yeah. So as you know, as you talk to people that want to buy a house for some reason, you can connect them. And then use that, if you find someone like, oh, you know what, as soon as you graduate high school or college, if you have a good enough job and no debt, you could qualify because of your school. Like, that's an awesome pool of people that now you can go market to and say, hey, like Lucas's friends, I imagine are here, or maybe it's your friends' kids. They could get a house with their income and their new job because they were in school, whatever. So it's opening up your eyes to who can qualify. And then it's kind of letting them get a little bit creative on if they do or if they don't.
Yeah.
And if you find a section of people that do, go hard and figure out how you can find more of those. Like Cody, for example, that taught last week, he got plugged into this Afghanistan community and he has sold 6, 7 houses to him.
Yeah.
8, 9,
Yeah, he's probably 15 to 20.
15 to 20 houses to people from Afghanistan.
Awesome. That's awesome for the people from Afghanistan.
Yeah.
Yeah.
Yeah, and so they all come together, they're a tight-knit community, and he gets all of the referrals because he is the one that has figured this out for them with the lenders. And so if you can do that same thing, you'll get a lot of referrals.
Here's
So you might not know all the answers, but they will.
something else interesting with kids, with people coming out of their schooling. How many pay stubs do you need to qualify for a home loan?
2,
30 days, usually,
2 or 4. Yeah.
right? What if you're coming out of school, like I have a son that's gonna graduate with a chemical engineering degree, right? He's got a TA job, right? Which is gonna go, you're right, so, yeah, like, he doesn't even pay for his own gas. Not to throw shade on poor Adam, but
But we're throwing some shade at
yeah,
it.
but there it is. So he's gonna get out of school and he's gonna get a job offer, right? And it's probably gonna, I don't know, for like 120, 130K, right? Is what they're starting out in what he's looking at, right? And they're in demand. So he's gonna come out, he's gonna wanna buy a house. He hasn't worked, aside from being a TA, right, in the profession at all. I'm gonna take his college transcripts, I'm gonna take his job offer, so he hasn't earned a dime yet, and I'm gonna qualify him to buy a home.
Wow.
He needs
So-
the job offer.
The job offer
That
letter.
job offer,
An
an
actual
accepted,
company saying I'm hiring you.
here's an accepted job offer, I'm gonna use the terms of that offer to qualify him to buy a home.
Without contingencies, though.
With, yes, yeah,
The job offer can't have contingencies.
but we,
Like you graduate being a contingency.
Or like, you know, you need to pass a drug test, a background check,
Oh,
whatever. Once you get through those contingencies, then we're good.
yeah, we do this for doctors
Mhm.
all the time. Just professional teachers all the time.
To the stock, to the universities, what you're saying.
I'm saying if people are under the misconception that they need 30 days of pay stubs to do something. Right? I just did one for a veteran, where his wife hadn't worked for like a year and a half. She ran out, got an offer for a job, got him enough income, got him into the house. Right? There's a few parameters that go with that, but there's options available to you. You had a question?
Grants or scholarships that they don't have to repay count as income?
They do not. Because they're not continuing. So, when it comes, there needs to be a reasonable likelihood that the income is going to continue for 3 years.
Love it. How much more
What did
time?
they cover?
Probably this one.
Oh, yeah, let's do this one fast. This is the most important, free money.
Yeah.
Free-ish.
Free-ish,
Yeah,
depends,
it's a free
depends,
month,
yeah. So there's definitely a distinction between down payment assistance and a grant. And sometimes they're actually one and the same. They're just marketed differently. So, a very popular one in Utah is called Utah Housing. Is everybody familiar with that group,
No.
that program? So it's the Utah Housing Corporation. And what they do is they offer, a bunch of things, but mainly down payment assistance, in the form of a second loan to the buyer. So you have your first mortgage, and then they will give them, an amount of money that covers the down payment, and in some situations, part of the closing costs as well. But they're doing so in the form of a second loan that they're paying back simultaneous to their first mortgage.
Which is awesome, by the way. Hunter just closed some buyers that they put $1,000 money down as their earnest money deposit. At closing, they received money back from that earnest money deposit.
It's super helpful for those people that need all the money they can get, especially after buying a house, right? The caveat to that, playing devil's advocate, is that money they're getting back is just financed into the second loan, right? So it's still probably helpful to them because they need money when they get into their home, right? Everybody would. But it's because we either got, well, two things. They either got seller concessions enough to cover what we needed and they got the money back. So in that case, it may not be financed, or we just had to bump up that loan amount enough to where they could get that money back. Does that make sense? Okay. Now Utah Housing does have some options, like you've probably heard of the $20,000 new build incentive. They call that a grant, but really it's just a down payment assistance loan that they're not collecting a monthly payment on. So you have to pay it back if you ever refinance or sell them. Does that make sense?
Yeah, and it's 20,000 up to.
Up to 20,000, yep.
Is that, I read somewhere that that's limited, like they have a fund and once it's gone, it's gone.
Yeah, so when Utah Housing's doing these kind of specialty options with their grants, it's a limited funds.
So that started like middle of last year. And I think it started with was it 2,500?
No, that's, 2,500 spots, yeah.
Yeah, spots that they had available. Last I checked, there were like 1,800.
Still-
So I've personally
Yeah.
never done one.
It's hard to find a house to call.
I've done
Yeah.
a few,
What are the parameters for that again? It's new construction,
up to 435,000 purchase price.
435.
It's
Yeah.
450,
Oh, it's 450?
450. Up to 450. New construction can mean that it just hasn't been lived in yet too. So it's not something that they're just working on building. So if there's a home that's complete, but it hasn't been lived in, that qualifies as new construction.
How
And
do you
then,
find out if you qualify for that? Just go on their website?
You check with Jake.
yeah,
Yeah.
ideally come to us, but you can go onto Utah Housing's website and it's fairly easy to navigate.
And it's not, is it for first time home buyers or anybody? qualifies?
I think anybody can qualify for that one, if I'm not mistaken. Is it first time buyers?
It was first time home buyers. A first time home buyer is anybody that hasn't owned a home in the last 3 years. I'm pretty sure it's first. time.
Okay.
I've done 2 of them and they were both first time home.
We'll go with that. They're on the safe side, first time buyers for that one.
But so this is when it's helpful to be like, okay, I have this buyer, like, are there any options for me? You can do one of two things or both, is you can just like call Jake and be like, Jake, what options are out there for help? Or you can just connect them right with your buyer and tell Jake, hey, my buyer is talking to you. also figure out what grants we can look at or should be looking at with their scenario.
Right. Yep.
Seal flex.
So I just threw a couple of these on here really quickly. They're lender specific down payment assistance programs. So there was two that I knew off the top of my head from lenders that we work with. So EPM, they're a mortgage company that we use. They have one called Empowered. It's very similar to a Utah Housing, except for I don't think that there's a monthly payment, right? It's a true grant.
Yeah.
So it's a true grant, which means that there's no monthly payment. You don't have to pay it back at any point. The catch with that one specifically is that their interest rates are gonna be significantly higher than even Utah Housing's. But the idea is that with them, and this is how they pitch it, you get the grant money and then 6 months later, you can refinance it. And do either a traditional refinance or something we call a streamline refinances, which is just another FHA loan, but a lot easier with better rates. So that's kind of how they pitched it to us, was take the higher payment for 6 months, kind of deal with it. You're getting the free money and then refinance it right away.
How much, yeah, the same as there.
Yeah, up to 3.5%. So that one has to be an FHA loan. And they'll do, I think it's 2% or 3.5%. So you can finance or excuse me, get a grant for some of the down payment or all of it. Yeah, and we can talk to the clients about that, but they'll just expect a higher interest rate, at least temporarily. Zero Flex is another similar program run through a company called Windsor that we work with. I don't know a ton about it, but it's probably going to be very similar to Utah Housing. So that one is going to be I believe a down payment assistance loan. Do you remember on that one, Windsor's?
Yeah, theirs is similar to Utah Housing.
Yeah.
It's like Utah Housing.
Yeah.
And this Mountain America Credit Union one that you were mentioning, Cameron, like a 10% down
Oh, yeah.
investor loan. So would we just like research different institutions to find out what's available? Just
Yeah, a good resource is Bigger Pockets. If
Oh,
you haven't
yeah.
been on there, it's a big community. You can, especially for investments, you can go and just ask a question like, I'm looking to have a lower down payment for an investor. Does anyone know of any good products? And see, or you'll randomly hear other agents in team meeting be like, oh, my buyer just found this from Mountain America, or I just heard of this thing. So like keeping your ear to the ground, kind of an idea. And then I would do research before you tell anyone about it, so it's not a bait and switch.
Yeah.
Like you can call Mountain America and be like, hey, is this real? What's the catch? Because there's always, they have to make money somehow, so usually it's increased clothing costs or more of an interest rate.
I was there for some time. Maybe because they couldn't sell it.
Weird. Yeah, this is not a thing anymore.
Um,
I never heard of anyone getting it.
it was super popular.
I did lose a couple buyers.
Yeah,
to it.
a couple years ago on the 10% down investor. I heard that they stopped doing it, but I'm not 100% on that.
Yeah.
It would be easy to pop on their website.
Yeah, pop on their website and see, call a loan officer and see when you're in a branch, ask them if they have anything.
So my opinion on all these things is they're very great, but it has to be a specific buyer. More importantly, what this does is it gives you a tool to talk to people about, just another thing that you can bring up to get somebody interested, to the point where they are going to talk to a lender and figure out if it's going to work, right? Because a lot of these, they are very specific qualifications for them, especially if we're talking the grant program. And not everybody's going to qualify because of income. They're going to look at the income caps on those, and those are usually pretty low if we're talking for the grants. The down payment assistance, I almost never run into people making too much money for those. But the grant programs, we want to definitely check into before we get somebody's hopes up, or if that's the only way they're going to be able to buy a place. We want to do that research ahead of time, is what I would say.
And so as you're learning about these things, my favorite way to use them is actually in like phone calls and marketing, things like that. So a lot of the times if you ask someone, who do you know looking to buy or sell a house? It's so broad, it's hard to find someone that's actually, they're like, I don't know, because they're looking at too many options in their mind. But if you're like, hey, who do you know that just graduated school that that has a good job or is getting a good job, that could use some down payment assistance to get in their home? Like, that's a very specific person. They start thinking like, oh, I have a nephew that's looking to graduate and he's gonna do good or whatever. And then they have a very specific name. It's like, great, I'd love to talk to that person, connecting with my lender, see if it's an option, something that they can do and actually get qualified early on. And so you can get a lot of referrals using scripts like that.
Yep.
Otherwise, I'd say just connecting with the lender, and if they know of anything that would be beneficial, they're gonna do a good job of connecting it.
Will you tell us just about like one of these city specific, just kind of give us an outline of what it involves, so we know?
Well, so Provo City, since that one's so close to us, that one's definitely gonna have some income caps on it. I don't know what they are off the top of my head, but it's gonna be for fairly low income. That one, they'll do up to $40,000, which sounds awesome. But they do make you pay it back. So that's one of those that's not necessarily a true grant. It works kind of like that $20,000 Utah housing grant that we were talking about. But if it helps get somebody into a home and they're looking in Provo City, great. Let's look at it.
And that might be a bait switch. Right? You might get someone excited about that and then they move to it.
And that's what a lot of these are. It's like, just start the conversation. And then maybe we get to talking about it, and the down payment isn't absolutely the thing that they're concerned with. Maybe it's the monthly payment. So then we try to figure out a way to get them qualified using a normal loan, because they want that lower payment. Because a lot of these, maybe not the true grants, but if we're talking down payment assistance or the ones where they're paying it back, the rates are gonna be higher, and you have to count that second loan payment, which impacts what they qualify for. So it's really good to get the conversation started, really. Did that help you out on the Provo City one? Okay. The NeighborWorks one is one I've heard a lot recently too, and I think Taylor with Security National presented on this in one of the team meetings, but I think that one is also, it's some crazy number. It's like 75,000 or something that you can get up to that amount. Don't quote me on that because I don't know exactly what the number is, but that one is for use in Salt Lake City and Murray. But the lender has to be qualified for it, which we aren't.
That's a great Security National for that one.
But just wanted to throw some examples up there of city or area specific. There's a bunch of them. I think I sent something to Connor a couple weeks ago about it.
So now you guys are the experts, right? You know everything. Basically do that.
Yeah, you don't need us now.
No, you won't know these things. And I always laugh when people ask me questions. They're like, oh, tell me more about the Utah housing thing. I'm like, oh, I don't know anything. Let me connect you with my lender who knows everything about it.
Right.
So don't feel bad if you don't know a lot and you need to send people over to them, or you're calling them or asking them questions constantly. That's what they're here for.
Yep.
Anything else? Any other questions?
Connor?
Credit.
Okay.
I have a client that went to a car dealership 2 months before he talked to me,
Okay.
but they ran his credit 14 times. Is there a way to contest that? I mean, it hurt his score, so obviously that's bad. But like, first of all, that doesn't seem legal or fair to credit scores. So, I don't know, I hate it.
Yeah, I mean, you probably could dispute it with the credit bureaus somehow. That doesn't mean that it's gonna get removed or do anything. If it makes them feel better, they probably could. The honest truth is that there's probably nothing they can do about it. Just the farther they get away from the credit pulls or credit inquiries, the less it'll impact their score. Fortunately. Yeah, I mean, there's a lot of stuff you can contest or dispute on credit reports, those being one, or late payments. Most times, the creditor is gonna tell you to kick rocks. Unfortunately, but that doesn't mean you shouldn't try. Like if somebody wants to do that, the thing you wanna be careful of is if there's a bunch of disputes on things on the credit report. Disputed items aren't counting in your FICO credit score. So positively or negatively, when they're disputed, it's like they're not there, essentially. So if somebody has several disputed items and their credit looks great, it may not actually be the case. So if you're disputing a bunch of stuff, whether it's inquiries or whatever it is, just know that. So like if you talk to somebody who's in credit repair and they say, oh, my credit's 700, I'm disputing all these things, it may not be 700. And some lenders will make us get those disputed items removed or get the disputes themselves removed before they'll proceed because they want to know what the true credit score is. Does that make sense? You know that?
I did not know that.
Yeah.
I don't know what I'm disputing.
You disputed some?
She said, I know.
What, I don't know what.
Oh, a dispute is like, if there's a late payment that you don't think should be there, or like an account you don't think should be there, you're disputing that with the credit bureaus, either TransUnion, Equifax, or Experian. So you're just saying, hey, I don't agree with this, and then they'll do their investigation to figure out, should it be there or should it not? And that process can take a while. So if you're trying to buy a house, that could interfere with buying the house. Not always, but it could. Hey, guys, thanks for coming.
Yeah.
Come find Jake or Eric with more questions there upstairs.
Jake, can I ask you a question on the adjacent topic?
Sure.
So if a homeowner owns their home outright and they want to sell, so the threshold for taxation on the sale of a primary residence is.
Thanks, Rich.
$500,000.
Melissa.